Hey traders, what's going on? Jamie Saettele here. It is July 1st, Thursday, 2021, and it's been a while since I have done one of these webinars, a couple weeks actually. Had a lot going on, family members getting married and stuff like that. So I was traveling out of town for, those usual Friday webinars, but back in the saddle here, and let's kind of, start off or start where we left off, which is looking at the dollar, the various dollar indices, DXY for one, and US dollar. And I also am going to share I updated some longer term charts during my travels, and so we'll take a look at some of those. But we've been obviously fairly consistent in the call for a stronger dollar, right? Certainly was not the popular opinion, and it was difficult to hold that throughout the last number of months, especially on this kind of retest pullback, what have you, into the end of May. But sure enough, we got a big move higher in the dollar in June. I actually think I saw somewhere a headline where it was the best month for the dollar since something like November of 2016, actually, which of course was when Trump got elected. And we had that huge reversal in the dollar then. All right, so let's take a look at DXY. These are some of the shorter term charts or daily charts, near-term charts that I'm looking at for possible reactions in this dollar move. You can see today, actually, we've got NFPs tomorrow, but we are getting something of a pullback here today, a slight pause in this dollar move. Obviously, nothing to really write home about just yet. However, if this continues over the next, few hours, we are going to get, so we had, these are my futures charts that I pay so much, close attention to for volume reversals and things like that. And you can see that we had 1 hour reversals, right, at the lows this morning, like the dollar highs, but lows for other currencies. We did have a 4 hour reversal here for euro, and we are going to get more than likely 8 hour reversals for British pound. And just to show you what that would look like. Okay. So we probably for euro and British pound, 8 hour reversals. So that would be 480 minutes. Hold on here. I will find it for you. Oh, crap. All right. So, traders, what's going on? Jamie Saettele here. It is July 1st, 2021, and welcome to the Power Hour with me, Jamie Saettele of Scandinavian Capital Markets and SB Trade Desk. It's been a while since I've done one of these webinars. We have been, or I've been quite busy with family things going on, weddings and stuff like that. We've been out of town, so haven't done one of these webinars in a while, but we will start where we left off, and that is looking at dollar indices, notably DXY and US dollar, right? We've been consistent in our calls really this year, over the last 6 months for dollar strength. It's been an unpopular opinion, and I don't really know of any others that have been that consistent in calling for dollar strength. It's been tough to hold that call for a while, especially after the big pullback that we had here into the May low. But sure enough, we had the best month in the dollar since November 2016 last month. So, we are coming up and out of this base, and I do think we've got, a good deal higher to go over the coming months. However, we probably are getting into some levels where we could see a pullback. We're actually seeing a slight pullback today, and we'll look at that here in a bit. As far as specific levels for specific currencies. But first, for DXY, you can see we've got this pitchfork here drawn from the January low. And again, there was that January low. You remember how bearish everybody was the dollar coming into 2021. And sure enough, we bottomed pretty much, right at the beginning of the year. Something of a double bottom kind of with the May low. However, we are getting into a huge level here. I've got it basically 90 to 80 to 93. You're going to have trend line here back from September. You're also going to have this high from April 6th and this uncovered close, right? So people talk about gaps all the time. Well, when you get a gap, you're going to have a close that's uncovered. And that gap sometimes gets filled, and when it does, it will often act as support resistance, at least for a while. So we've got the median line from this. I have this here just because it's not confirmed yet, right? And I oftentimes don't like to draw them in until they're confirmed, so to speak. But let's have it here so we know it's there, and there's a beautiful intersection with this trend line. So that level, 92.80 to 93, is the level that I'm thinking we get a decent pause or reversal attempt in DXY. Before I move on, I think it would be useful, because I did some really long-term updates during my travels on the plane, and here we go. So let's take a look at some of these. So I've got these saved, so they're not going to be live, but they are longer term charts. All right, so here's DXY. I'll just kind of run through these real quick. But DXY, this is a weekly chart going back to, since 2008 low channel. The, center channel line is parallel, along with just the, clearly important 2009 high, right? That's where we bottomed. You can see the base down here, underside of this trend line here. That puts us back towards essentially follow the 200-week average. And underside of that trend line puts us up here, 94.60, 95.80. Okay, so again, thinking that we do have more to go. Let's go at Euro. And again, these are probably, these are going to play out tomorrow. We're talking about longer term charts here. Here is Euro. Okay. Now, again, this is Euro, and Euro's only been around since 99, so which is like over here. But pre-Euro, we've got synthetic rates, which means it's mostly Deutsche Mark, right? Now, this is an interesting chart, because if you look at it this way, all we've done is consolidate after a huge breakdown. This is not to say that Euro can't completely collapse, right? So I'm more open-ended when it comes to, the big test is going to be that DXY chart, right? I'm more open-ended on a longer term, direction, with Euro being either direction. I could see up here, I could see down here. I know that's not extremely helpful, but there are massive levels to pay attention to. So we have this fork. The first big level, again, probably about 116. Again, 200-week average there. You've got that low. You've got a parallel. But the big, point to pay attention to for this Euro chart is the fact that, again, that 1999 high that's been a huge level, right? I mean, look at all the lows that we had, right? During all the crises years, right? We had the, great financial crisis, recession, blah, blah, blah. We had the European debt crisis. Finally, the breakdown, right? And we've come back and tested that twice now over the last couple of years. So, to me, you got to keep a pretty open mind in terms of where Euro could be headed over a very long-term basis, given the fact that we've failed at this massive 123 level. So there's that. Dollar Swiss. Hold on here. Got big question. And I will look at that in a little bit. Let me run through these charts here. Here's Dollar Swiss. Okay, we're looking at, a trend line back to, this is a monthly chart, back to the 80s, and basically 102. All right, that's all you need to know there. Cable, I'm actually going to spend more time on cable here in a little bit, so I'm not even going to go to that really long-term chart. Aussie Dollar channel, the entire basically COVID trade has played out from channel low to channel high. First level you're looking for here is that 200-week average on Aussie, but we could come all the way back to the center channel line, which is going to be mid-60s. Okay, that line was, you can see here, was former resistance for years. Okay, and then we took off after we accelerated, so you could come back to that. Kiwi, again, this is a fork all the way back to the 80s. We pulled off of it. First level 200-week average is that in line with that former high at 67.50. That's a huge level to pay attention to. Really not that far away from it. Dollar yen. Again, weekly chart going all the way back, basically, the entire history of dollar yen here. And, my view is that everything from 2015 is a huge B wave. Okay, we could trade up to 115s, 118s even before we've pulled back. But eventually, I do think that you could get back at some point to this trend line to complete a massive B wave, right? Okie dokie. So those are the really long-term charts. I think I'm forgetting one. Like, is it dollar CAD? Let's see. Hold on. Oh, here we go. Here's dollar CAD. Dollar CAD, basically 130 is your huge level. This is a weekly chart. Okay. So we've got those really long-term charts to pay attention to. I've also got some on gold and the Dow. Here's a Dow chart if you want. This is actually back all the way to the Great Depression low. And we are looking at parallels within that. We've actually hit the parallel that is equidistant from the parallel where you made the March 2020 low. So we would be expecting a reaction off of that now. So we'll have to pay close attention to the Dow over the coming days, weeks, and what have you. Here's a close-up view of that chart. Right, you can see the importance of this parallel here. Actually crosses all the way back to 1987. Support, March 2020, and then we traded up to it here a couple of weeks ago. We've kind of done nothing, so just waiting for the market to figure itself out. But about 25% down is huge support from the center line of that entire channel from the Great Depression low, and that's going to be about 26,000. All right. Okay, got a lot of questions coming in. So now that I'm finished with the long-term charts, let's see what we got. Let's see. I am not really understanding this question. So it says here, how you place the pitchfork for any in the euro chart, it was placed for a high, low, low. But in the weekly chart, it was high, low, high. In my daily high, low, high. I'm not really, is there any rule-based way to plot pitchfork? Well, so again, when you're looking at pitchforks are just a form of trend lines, okay? So what you're looking for is the slope or the angle that the market's trading on. But yeah, you're always going to have, it's either going to be a low, a high, and then a low, or it's going to be a high, a low, and then a high, right? You said something about a, I'm not sure really this question. You said something about a high, low, high, or a high, low, low. You can't draw them from a low and then a high and then another high or vice versa. Frankly, I'm not really understanding this question, but it's always going to be a low, a high, and then a low, or a high, a low, and then another high. Ernst asks about Bitcoin. What about Bitcoin? We'll look at that. What's the best chart for a long-term view, he says. Well, I would go look at a weekly or a monthly chart. Okie dokie. All right, so let's move on here to near-term charts. Okay, so yeah, 92.80, 93 DXY is a big spot. All right, let's go to Euro Dollar. Euro is actually on, this is one we looked at a while ago. I think we talked about 118 something. But if you look at this, trend line all the way back, 2008, 2014. Guess what? Where we are. Now, if we, get a bigger reversal, like on a daily basis, or, see what happens tomorrow, I've got NFPs tomorrow, but I'm looking at this from the standpoint of basically the opposite of DXY, of course. And the question before about the pitchforks, maybe this helps, but like you can see drawing from a high and then a low and then a high, right? Rather than a low, a high, and a low. Those are the only two ways to do it, right? You're always going to have either a high, low, high, or a low, high, low. So I'm not sure. Again, that question was kind of confusing, but here we are looking at the center line, which again intersects this trend line, and that's going to be about 117.70 or so. So that's a really big spot to pay attention to. This red line here, which is the 25 line of parallel, which happens to cross that resistance level from last Friday, that actually is going to be a level to pay attention to for resistance now. And that's going to be, it decreases each day, of course, but like, generally speaking, it's like 1950s. So if we had like a big spike higher tomorrow or something on NFPs or whatever, or we drifted higher for a couple of days, this is the line you want to look at for resistance in euro, right? Now, do you remember on that long-term chart, we talked about 116 being a big level? Well, that happens to be also where you get two equal legs down from the high up here at 1620. So we've got a number of levels to pay attention to, with the immediate one being about 117.70, okay? All right, pound dollar. I want to spend a little more time on cable right now because cable is into an important level. I actually just took off some shorts on cable just before this webinar started. We have a shift fork here from the low in March 2020, okay? And I'll just get rid of this for now. But you can see that the upper parallel nailed the high, right? In fact, almost all the parallels within this fork have been important, right? The 25 line was important. The center line was important. The lower parallel was hit today. So we are looking for a bounce based solely on that fact. Now, if we went just a little bit lower, right, to like 37.40, you could still see a bounce. And that is, you see this thick magenta line here, right? That is this chart right here. So here's a daily chart. This is going all the way back to 2016, 2016 low, excuse me. And that center line, you can see right there, I have it highlighted, right? Just how precise and important it's been, right, as far as a pivot's concerned. So that's just a little bit lower. But again, we've hit support here. So, you know, as far as being a bearish, you know, a bear on cable, it's probably a good time to maybe think that you're going to get a bounce, or at least go neutral, which is kind of what I've done here. Also, if I were to take a look at so these are my volume charts, right? And we're going to get a 4 hour, not 4 hour, we're going to get a 4 hour, but we're going to get an 8 hour volume reversal for British pounds. And this here, previous signals for that. Okay. So you can see we're going to get this is the futures chart, 8 hour session ends at 9 o'clock. So that's in 40 minutes. But you can see, but last buy signal, so to speak, was over here. Actually had a sell signal on the top. Are you going to get a bunch of false signals? Yes, you are during trends like this. But even here, you had some pullbacks following, you know, the signals. And obviously, we had a buy signal back here in September. So point being, we are going to, you know, have a signal at a level. And that's another thing. Like, you know, a lot of these signals weren't at important levels. We have the combination now of having a huge level and a signal. So I would not be surprised if we had a decent size rally, maybe even back to 140 in British pound over the next couple of sessions. All right. So there's that. Let's go to take a look at dollar yen. So I wrote this in last night's update. I'm wondering if dollar yen's about to go parabolic to the upside. So for one, we are well above this, you know, this trend line, right, back to 2018. And two, we have what's considered or could be a running wedge here. Okay, what is a running wedge, you say? Well, the best example I could come up with, so running wedge, it's a wedge, but then you break out the top of it and the market goes ballistic to the upside. One example I have is from, let me see if I can find it. So I had it last night's update, so I should be able to find it. Here you go. This is from 2014, dollar Mexican peso. You had, this was a wedge here, right? You can see the breakout here in November of 2014, and then just went ballistic. Okay, so that's just one example. The example is in my mind, I guess, that I remember quite well. So that's what I wanted to show. But that's, you know, an example of a running wedge, and you can see if we get something like that now, that could be that run all the way up to 115 to 1 or 118 that we looked at on that long-term chart, right? That monthly chart, or that long-term weekly chart, excuse me, that I looked at in the beginning of the webinar. So something to think about. Aussie dollar. this has just been or picture perfect. I mean, ridiculous. So like, here was the channel, dropped, came, former channel support. I mean, this like I've talked about this and had these charts for days and weeks. This is a textbook play. Bounce off the center line, break the center line, come back and tag the center line. Former support becomes resistance, drop. We are looking lower towards the lower parallel in Aussie. Again, 74, 20, give or take, is going to be the level. There's a lot there. 2 legs down, 23.6 retrace, high from September, and lower channel line. So that's a huge level for Aussie, and I think we get there at some point. And depending on what happens there, could have a lot to say on kind of the next big move for Aussie, because if you break below that, then you have kind of free fall territory. If you hold up, then we could be ranging within this for quite a while. Kiwi, very similar. So with Kiwi here, I'm actually looking to short pretty soon. But we are, continuing to look at that lower channel line. Again, 67.50 to 68 is the huge level to pay attention to. Again, also the 200-week average down there. You got the 38.2 of the entire rally from March 2020. You got 2 legs down. You got lower channel lines. Lots going on there. And on a shorter term chart, and coming up here soon, you're probably going to want to pay attention to, I'd say 70.50 or so. If you just threw on like a short-term fib, 70.45. So that's kind of where I'm looking to, return to the short side on Kiwi. Dollar Cad. This has been a good one too. So you can see here we've got this channel. Again, this is another great example of median line analysis concepts working out great. So original slope, draw off the 2 lows, extend a channel off the high, and market comes back, hits support. This trend line here, right, back to, what is that? April of 2020, right? Beautiful touches, and now we come back and we want to see that hold. So yesterday it held. Let's see what happens today. But basically 23.50, give or take, is going to be your level for proposed resistance. Now I'm actually looking for a pretty decent move to the upside here, as long as we hold this low from last week. And again, if you just give it 2 equal legs up, okay, that's going to get you 27.33. Guess where the 200-day average is? Right below there. And guess where the yearly opening price is? 27.21, right up here. So we've got a lot in that zone of basically 26.50 to 27.30. Okay, that is kind of a magnet for me as far as a target upside objective to think about. Real quick, let's look at some yen crosses, non-dollar crosses. And remember we looked at maybe dollar yen is going to go ballistic on the upside. Well, here's an interesting something to think about with these yen crosses. So we actually had a short euro yen position here, and we exited right at 31.40. It was perfect. That was a good example of what I call daily reversal support, which is the close of the low day. But what's interesting is pullback held support on euro yen. Okay, if we look at like Aussie yen, same thing, right? Pullback held support. We actually were short here, and we were able to get out there at 84.20, which again, daily reversal support, but we pulled back to 618 retrace. So my point is, $61.8 retrace. Okay. CAD yen, 61.8 retrace. Kiwi yen, I didn't put this down, but it's probably the 61.8 retrace or close to it. But I know pound yen is, yep, pound yen 61.8 retrace. So, you know, I have yen crosses into like really long-term resistance, but that initial rally from that kind of panic low a couple weeks ago, if you will, we retraced 61.8% of those rallies, and which makes it possible, you know, or at least you should consider the fact that we could get another leg up in those. So. Kip Lamo responds to, hey, Jamie, I've been stopped out for at least 3 trades. What do I do? Well, I'm not sure what to tell you. You're going to be stopped out a lot if you're doing it right. You know, in my opinion, I mean, I get stopped out more than I hit targets. But yeah, I don't know. The euro yen trade was a useful, successful trade. That was not stopped out. I'm not sure. Maybe if you're getting stopped out for no reason, maybe you're entering and exiting at the wrong levels. I'm not sure. But yeah, everyone goes through bad streaks for sure. You know, try to trade around support resistance levels. Try to have those mapped out ahead of time. You know, like I like to say, you know, you shouldn't be doing your analysis and trading at the same time, right? Have your period. I like to have more of a quiet part of the day, maybe during like the Asian session, where I will kind of go through my charts. That's when I write my analysis and have my charts laid out and my levels laid out, so that when the market is moving, you know, it's almost like I'm just a computer kind of, you know, running a program, and I'm trading at the levels, right? Rather than trying to getting emotional about it. So I don't know, maybe that would help. Okay, so just about done here. We'll take this is a really important chart. The copper chart, where are we? Here we go. So let's keep in mind that copper chart. We've focused on this one for a very long time. This is that trend line that was broken in copper. Remember that? We talked about that. That was huge. We have come down and based around the support that was suggested, which again is 23.6 retrace of the entire rally from March 2020. So from here, with us bouncing a bit, pay attention to say about 440 to 440, former support. Look for that to provide resistance. If we do get a bit of a dollar pullback, that might coincide with this copper rally, but then I'd be looking for resistance up there and a resumption down to much bigger support, which is near the 200-day average, and 38.2 retrace, which is going to be also very close to that high from January, and that's going to be in the 377, 380 level. So that, my friends, is everything I've got. Let's see what's going on here. Not a whole lot. Probably going to be, you know, more of a, you know, treading water type of deal here, I would think, until we get those payroll numbers tomorrow. But, you know, after the day is done, I will take stock of what has happened, and I will be writing about any such reversals if they happen. British pound, I think, again, is probably the most interesting one of the group, considering that big volume level that we had and the big level that we hit on cable. Okay. Oh, Bitcoin. I forgot about Bitcoin. I'm sorry. How crazy of me to forget about Bitcoin. Okay, so we have been nailing Bitcoin as far as see if I can find here. Last chart that I wrote about Bitcoin. So remember, this was the one, just real quick, this is the, once we had that kind of panic crash, right? We talked about the tendency, I guess, if you will, of Bitcoin to, after those crash highs or crashes off of highs, to retrace 38.2% of that move. And that's why we were looking for resistance where we were, and we did retrace about 38.2%. I still think we can actually oscillate between here and about 43,000 before we tank again. And I do have, this is from the June 22nd update. Here we go. Here it is. So here's the June 22nd update. So that was, I guess, June, what was that day? Was that this 22nd? Yeah. But you can see that was, you see this magenta line here, that's 29,000. That's actually the yearly opening price. And we got a volume reversal day that day, right? Interestingly enough, the only volume reversal day we've had in Bitcoin in recent years, from a bullish standpoint, was back here in 2019, right? That led to a pretty big move higher. So the fact that you've got, it's a lot like British pound right now, actually. We're working on a volume reversal, albeit on British pounds. It's actually an 8-hour chart, but you can see we've got that move from the year open, huge level, volume reversal. And from an Elliott standpoint, you've got 5 waves down, right? 1, 2, 3. This could be 4 right here, 5. So again, I'd be thinking that we come back to that 43,000 level or so. Obviously, hard stop on this below this low, because you do not want to get caught in going the wrong direction with respect to a Bitcoin move, right? So yeah, that was here 622. We've held up since, you know, a little making higher lows, higher highs. I'm looking up towards that 43,000 level, and then probably going neutral, if not just straight bearish, if you can figure out a way how to play that. All right. So that's all I've got. So Bitcoin, I hope that does help. If you are looking for a level to provide support on Bitcoin, here is a great example of possible daily reversal support in play. Take the low day here, put a line on it. That is 30. What's that close? 32,545. So that, my friends, might be where you want to look for support on Bitcoin. Okay. All right. So that's it. Again, I'll see you next week, probably on Friday, but I don't know. We've been doing on Thursdays at times, which seems to work out. So we'll see. Again, for everybody in Canada, happy Canadian Day. I think it's something like that, right? Happy Canada Day. And for us in the States, happy 4th of July coming up here on Sunday. Enjoy your weekend. Be safe. Be careful. Barbecue lots of food. Drink lots of beer. Have a good time. All right. Take care, everybody. Jamie Saettele here, signing off.